Is Bitcoin still going to be the earthquake that will shake all markets, or is that moniker now going to be shifted to gold? We're going to be talking about this with Florian Grummes, Managing Director of Midas Touch Consulting. Florian, welcome back to the show. You have been calling for Bitcoin to outperform all other assets. You said that in 2020. You were correct. So far this year, you are still correct. Congratulations and welcome back.
Thank you. Thank you, David, for having me. It's a pleasure to be back on Kitco.
So give us the Midas touch. Give us the outlook on all three assets. Let's start with gold first because I was away on vacation last week and I haven't checked the charts. I came back today and I was like, whoa, we are way up. Tell us what happened. We're at 1904 right now as we speak on Monday. And this is a move that has been long anticipated, but it's finally been happening. What's been driving up the gold price?
Well, first of all, I think it's important to make clear that we had a big double bottom in mid and end of March in the gold market. And since then, gold is moving up step by step. It's not like crazy momentum, but it's a nice, steady uptrend. So we're up $230 right now. And I think it's basically the reaction to this 9-month correction that we've seen since the new all-time high last year in August. And gold probably still has some more upside here. I think 1920, 1923, this is the 61.8% retracement of the whole down move. So that's, I think, the minimum target in the short term. And maybe with some luck, the bulls have enough power to push it towards the 1950, 1960 resistance. That's where I actually think we might get a little pullback back to the 1850 kind of range. That's where the 200-day moving average is currently trading. And that would be actually the good launching pad then for the summer, where I expect the attack towards the $2,000 level in the gold market. So I think it's looking very nice. We had a nice big shakeout, 9 months, deep correction. Been painful for many people who came too late into the gold market last summer. But gold looks good here. And I think it will pull silver also along.
So $2,000 by the summer. That was my next question as to whether or not we're going to reach $2,000 by this year. Now, $200 upwards is a pretty big move in a rather short period of time. And I'm wondering if you think we're about to hit some resistance after this rather substantial move. But you said we're likely retraced to 1850.
Yeah, I think 1950, 1960 in the best case. Maybe already 1923, that's where I see this kind of like current wave up kind of stalling out. And then I would see a pullback towards maybe 1850, 1840, maybe testing the former downtrend channel from the upside. So that would be a good buying opportunity if it happens over the next maybe 2 months. Typically, gold finds a seasonal low somewhere in June, July, and then starts a strong move up towards August and September. So that would fit the picture. Let's see. Any pullback in gold is a buying opportunity here.
Okay. We're talking about these charts offline, gold's relationship with inflation. And I had discussed with you how, according to my findings, gold's historic correlation with CPI has been very, very low. The correlation is rather inconsistent, shall we say. However, if you plot gold price next to inflation expectations, so future outlook of inflation. So if you take a look at GLD ETF versus the TIP ETF, for example, the TIP measures the Treasury Inflation Protection Security. Now that correlation is very high. So why is it that gold's correlation with historic inflation is low, but the correlation with inflation expectations is very high?
Well, first of all, I'm not a fan of the CPI index or data. I think it's a hedonistic approach to keep inflation numbers low. It has been changed many times, so the formula is not the same like they used, for example, in the 1970s. So I would suggest to talk to John Williams from Shadow Stats, and this will give you a very different picture than the official CPI numbers. And then the second thing I would say is CPI is looking in the mirror, while inflation expectation is actually really measuring the emotions and the expectations of the people. And that's why you would buy gold if you expect higher inflation. So it's no wonder that those two are basically going well in line. with each other. Again, I think CPI is not a good way to look at the markets anyway.
Are there other variables you prefer to look at when it comes to measuring relationships with gold, like the dollar, for example, or interest rates, real rates? What else do you look at, macro variables?
I mean, in the really big picture, you look at the golden constant, which is for hundreds of years, basically, you could buy various things with 1 ounce of gold. You could buy a dress for a man, for example. You could buy with 1 ounce of silver, you could buy a chicken. These kind of things are established over hundreds, even thousands of years. So it has proof again and again that gold keeps your purchasing power over a long period of time.
This is an interesting concept, the golden constant. Now, you mentioned this has held up for thousands of years. I wonder if it will hold up against digital assets going forward. Bitcoin is relatively young. Been around compared to other assets. It's only been around for 12 years. It's nothing compared to gold. However, if you take a look at the gold to Bitcoin ratio, for example, it's steadily trending down. I wonder if gold will maintain its purchasing power relative to digital assets going forward. What do you think?
I've been tracking the Bitcoin gold ratio for many years already, and I've been publishing it nearly every month in my reports. And I don't think that gold can keep up with Bitcoin. But that doesn't make me put all my money or all my eggs into Bitcoin, because I want to have something that is untraceable, that works without electricity, and that also works without the availability of free internet. And that's why I believe you also want to hold gold. So I've been always saying you want to have both gold and Bitcoin. But it is true, and gold bugs have to accept that truth, that Bitcoin has been outperforming gold mercilessly over the last 12 years.
Uh-huh. Before we move on to Bitcoin, let's wrap up with gold now. Your outlook for the end of the year, let's say, for the price. Now, you mentioned $2,000 by the summer. What about all the way to December?
I would expect that we get another pullback somewhere between 2000 and 2050, 2075 later that year, but that gold will then make higher lows. So let's say we get this in the short term, this pullback 1850 over the next 1 or 2 months, then we run towards 2000, and then maybe the next pullback will end already at 1900 or even at 1950. And then you have this series of higher lows while we have a horizontal resistance line around the $2,000 level maybe. And then at some point later that year or early next year, I guess that gold can break out, run towards new all-time highs.
Okay, new all-time highs by the end of the year. All right, Bitcoin now. You wrote an article recently, well, May 22nd, it was released. Bitcoin is an earthquake in the crypto markets. What do you mean by that?
I was referring to the nasty liquidation and crash in the sector. I mean, over the last few weeks, we have seen that while Bitcoin basically was stalling out, it couldn't make really, or couldn't create more momentum on the upside. We had one higher high at 65,000, actually exactly on the day of the Coinbase IPO. And since then, it gradually went lower, while at the same time, Ethereum managed to double, which is already a warning signal. And then you had like all these crazy coins like Dogecoin, etc., going through the roof. And all these were really warning signals. And then, yeah, you had this kind of earthquake where suddenly everything started to crash due to all these liquidations. And that's basically what I meant with the earthquake. But as you can see, the market has already stabilized. And many of the smaller coins actually have recovered quite well. So I think we have to accept actually in all markets now crazy volatility. This is part of the cracker boom. And yeah, let's see. Bitcoin might need a little bit more time to digest this crazy price action over the last few weeks. But I think towards the third and fourth quarter, we're going to see new all-time highs in Bitcoin.
You love talking about the crack-up boom. You and I have talked about the crack-up boom and hyperinflation before on our show. It was one of the more memorable conversations I've had with you. Now get this, Florian. What if gold isn't going to be the ultimate hyperinflation hedge of the future? What if that role will be shifted to something like Bitcoin? Is that possible?
I think it's already happening. So again, you want to have both. I'm not the guy who puts all my chips on red or on one horse, but I think it's already happening. The cracker boom is a process, and you need to understand that this can take years. And it's the best explanation actually for the fact that everything is rising, right? I mean, the stock market is at new all-time highs, real estate is up, lumber prices are up, copper is up, oil is up, gold and precious metals are up, the cryptocurrencies are up, everything's going up. And I think the cracker boom is really the best description because it basically describes that due to this constant expansion of the currency supply, the confidence of the people is getting lost and inflation expectations are getting step by step out of control. And that's why everybody's trying to bring their hard-earned fiat money somehow into hard assets.
You're right. Inflation expectations are trending up. I'm going to show the TIP ETF one more time. It's been trending up all year. Now, in relation to Bitcoin, are you suggesting, Florian, that Bitcoin's rise in the last 6 months or so, well, it has been volatile in the last month, but generally speaking, the uptrend we've seen in the last 6 to 8 months, was that due to inflation expectations?
I think it's been a mix of many factors. Certainly, also inflation expectations. Bitcoin had been in a long consolidation since the all-time high in 2017. It took the market nearly 3 years to be ready for the next move higher. Gold had been already moved before Bitcoin, so there was also a signal. And Bitcoin is a big, innovative, disruptive technology. A decentralized network is still something new in the big picture for mankind. And it's going to attract more and more money. And of course, behind Bitcoin is the idea of the separation of money and state. And this is a concept that people maybe are not really aware of, but it is happening step by step. And you want to hold Bitcoin. You don't want to be afraid of it. Step by step, yes, it's a crazy volatility in those markets. If you have a bad timing, you're down 30, 40, 50% within 2 weeks. So you have to be careful what you're doing. But I think it's the best hedge that we currently have.
You showed this chart in your article. It's the Fear and Greed Sentiment Index for Bitcoin. And currently, as of today, I just checked the latest update, it's still in the extreme fear section. It's moved up a little bit towards the greed area of the chart, but not by much. It's still in the extreme fear section. So what does this tell you, Florian? Are we still going to see more downtrend because of this sentiment? Or do you think this is a sentiment reflecting an oversold position?
I think it's reflecting an oversold position. The numbers, as you rightly pointed out, have been around 10, I think, last week.
10, yes.
I've been tracking this fear and greed index also for quite some time, and it has done a great service. You need to be a contrarian. So if everybody's greedy, like a few weeks ago, you want to be careful, and that's what I told my people. And now that there's panic and fear in the market, I think it's interesting again. I'm not sure if Bitcoin really has hit the low already. There's one thing that I need to share with you. There is an open gap in the Bitcoin future between 24,000 and I think 26,500. So it could be that the market needs to close this gap at some point over the next 2-3 months.
Sorry, what do you mean by gap? What is this gap? What are you referring to?
So Bitcoin is a 24/7 hour market. But the futures market are only trading Monday to Friday. So there was, back in December, there was a big move during the weekend in Bitcoin, and it jumped $2,000 or $2,500 higher. And on Monday, when the futures market opened, immediately the prices were reflecting $2,500 higher levels. And this gap, there was no trade basically happening. And usually or often, and this is true for actually all markets and all stocks, often those gaps get closed at some point. And I wouldn't be surprised if Bitcoin comes all the way back to 24 to 26,000, more or less, to close that gap. But I think that would be a wonderful buying opportunity. But I don't think it's going to happen immediately because, as you rightly pointed out, sentiment is beaten down. So I would first expect a continuation of this recovery, of this bounce, maybe 42, 47, maybe even 50,000 before we have another pullback in Bitcoin. Everything is speeding up. That's also part of the crack up boom theory. Things are accelerating because we are more and more going into an exponential period of time of exponential age. I mean, Raoul Pal called it the exponential age, and I think he's right. Everything's becoming more and more exponential.
So yeah, you did write in your article, your conclusion was that above $30,000, the uptrend is still intact. Well, right now we're at 36, and like you just said, you're expecting it to go to maybe $40,000 to $50,000. But why would it retrace from there? Why wouldn't it keep going up?
Well, of course, I don't know. I'm just saying there is an open gap in the market. I'm aware of this. Usually, often markets tend to close those gaps at some point, especially in the futures market. So this could be one downside that we have to be aware of over the summer, I would say.
Okay.
And that could actually, if Bitcoin corrects a little bit further, this will drive gold, of course. So,
it would drive what, sorry?
It will drive gold higher, because a lot of money has been moving from the precious metals into Bitcoin, and lots of people who would have normally bought into precious metals have been buying into Bitcoin. Yeah. So if there is, and we've seen this already over the last few weeks. So because you asked me also before why gold is had a nice move over the last few weeks, I think the correction in the crypto space certainly put some fuel into the rally for gold.
That's an interesting point. There has been a debate as to whether or not capital has flowed away from gold into Bitcoin and vice versa, and you're saying it has. What data were you looking at to suggest this this theory?
Yeah, I mean, capital flows are always tricky to track, right? But you can definitely see it. I mean, all the people that are subscribers from me or that follow me or that I talk to, who used to be strong gold bucks or interested only in precious metals, at some point become interested in Bitcoin and cryptos. And if prices are moving higher and higher, people get bored of the old school gold market and put their money into cryptos. This is always the same. So higher prices attract more speculation. It's always the same. And I think that happened. And now lots of people got hurt. Let's see where they're going to move over the next few weeks. But I think for the next few weeks, precious metals are probably going to do better than the cryptos.
Okay. Wow. Thank you. That's the first time I've heard you say that in many months. All right. Interesting to see your sentiment shift back towards the metals. Now, let's close on the metals. Basel III, you were talking to me about this offline. You wrote about this. Tell us broadly, what is Basel III? If this was a regulation that was first introduced way back after the financial crisis of 2008, why is it still relevant today, and what is the impact on the metals markets?
Well, it's a voluntary regulatory framework, basically, to stress test central banks worldwide. And yeah, it basically requires banks to hold a certain percentage.
Sorry, central banks or financial institutions?
Central banks and also financial institutions.
Okay.
And it requires the banks to hold a certain percentage of the assets in something that is deleveraged, or something that they can use to deleverage their lendings against. And gold is now, I think, end of June, moving from a tier 3 asset towards a 3-1 asset, meaning it will count as a 100% reserve asset. And I assume that, especially in the Eurozone, the European banks will find that highly attractive to increase their gold holdings. And that could actually lead to more physical gold demand. That's basically what I wrote in the article.
Now, you had forecasted maybe $1,950, $2,000 by the summer, and you were saying that July is around the time that Basel III would have to be implemented. So that's only, what, a $50 to $100 upside. So I'm assuming that then Basel III would not have a significant upward impact on gold. Is that fair to assume, Florian?
No, this is not something that happens within a day or two. This is a process, again, over the next 1, 2, 3 years even.
Okay.
It can actually lead to significantly more physical gold demand from European banks. So far, what we've seen over the last 2 decades, basically, most of the physical gold has been moving from the west to the east. And this trend is unchanged. So we know that China and Russia hoarding gold, basically. There is no physical ounce of gold leaving China. China is the largest gold producer already. And besides that, we have the Indians buying gold. Most of the gold is actually in Indian temples. And all of the Western central banks basically have step by step either depleted their gold reserves or just not increased it, at least. And most of the financial institutions in the Western countries also didn't really accumulate a lot of gold reserves. And this might change now, especially in the Eurozone.
And now you're talking about the different tiers of capital. How do you classify tier 1, 2, and 3? And what is gold currently right now under this classification?
Under this classification, gold is a tier 3 asset, and it will move to a tier 1 asset. And banks can basically use physical gold holdings to deleverage their lendings against. So that's a significant change.
What's the difference between the tiers?
The tiers is basically how you can treat this in your balance sheet in the term of the stress test against. So it depends on the idea behind it is, of course, to reduce the risk in the system. And banks have, we all know that, created huge amounts of leverage by holding especially paper promises against their lendings. And once they start putting physical gold into a tier 1 asset, this will probably stabilize the whole thing quite a lot. And it could also actually be a solution for, at least a partial solution for the problems that we have in the system. So we all know that since the end of the gold standard in 1971, step by step, this confetti party over the last 50 years got out of control.
Yeah.
And it would be good if banks actually put physical gold in their balance sheets again, and are basically incentivized to do so.
Okay. All right. Finally, Florian, you said that gold will outperform Bitcoin over the next couple of weeks. Well, don't keep us hanging now there, Florian. What about for the rest of the year? Do you still think Bitcoin will outperform everything, or is gold going to take the crown this year?
It's a good question, but I think later that year you will see Bitcoin catching up again. I don't think that this bull run is over. I think we are in some form of a consolidation in Bitcoin right now. It could take a few more weeks or even 2-3 months. But I think later in the third and especially then the fourth quarter, I think Bitcoin will see a stellar rise again. And I still believe we're going to see new all-time highs in Bitcoin.
That was okay. So you answered my question. So big all-time highs for gold, new all-time highs for Bitcoin. You really can't go wrong investing in either one. Thank you very much, Florian. Thank you for coming on the show today. Great updates.
Thank you, David, for having me. It's a pleasure. Thank you.
Always a pleasure here. And thank you for watching Kitco News. I'm David Lin.